Crude oil breached past the critical mark at 65. In fact, has moved towards 65.5, the next resistance, and has shown a stronger pullback. But most importantly, it is yet failed to breach 63.8, 64 zone. While natural gas yet again traded bearish, hitting the lows at 3.56. Now, what to expect from oil and gas today? Are we looking forward to a rise here, or a greater correction should follow? What should be our strategy? We're going to see with the help of charts and indicators. I'm not only going to give you the trading levels, but also going to give you the reason behind each and every level. This is the only channel to do so. This is the only channel to deliver twice a day updates. The next update will be there before the US session. Do not miss to watch it. And yes, the inventory data today for crude oil might bring further or might add on to the volatility into the oil prices. Thus, trade with caution. Subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. First, we look into US crude, followed with net gas. Watch till the end. If you see oil on the early chart, see it was trading bullish here. It has breached the 20 period mark and has hit lows here. Yet, if you see this, you can connect the lows and the highs. You can find out this is how it has been trading, hitting the top of the channel, then coming towards the bottom, then hitting the top of the channel, staying here, and then coming towards the bottom. Now it appears it might stay here before hitting the top again. And see, it is getting a very good support here at around 63.8. And now 63.8, 63.4. This is the zone you should watch. This is going to remain a critical support zone for crude oil for the day, for the week. Yes, this was the strongest resistance when the prices were lower. Now this is going to be a stronger support. Look at the move here. See, despite the drop, you can see prices uh, failed to trade below 63.8, and on the upside now the resistance at 64.2 is getting stronger. So I'll say if you see it is staying beyond 64.25, you can buy for 64.5, 64.7 the first target zone, and then 65.3, 65.5 the next. Moving averages have started to converge. The stochastic rising, the MACD has traded bearish here, trying to converge crossover for a buy. RSI stayed flat. Coming to 2 hour, on the 2 hour chart, similar is the observation here. Yes, it has hit the lows, it has taken the support, now trying to rise, and it appears it has found its support, and it is going to be a stronger support as well. So now if you see it is staying beyond 64.2, 64.3, you can buy for 64.5, 64.7 as the first target zone, 65 as the next, and then we can expect 65.5, 66.2, and in fact 67 levels as the next targets here. Yes, possible. Stochastic is oversold. The MACD is trading with divergence and bearishness. It was trading overbought here. It is looking downwards. Yes, it has hit the peak here. That is what we had discussed yesterday. If you watch my yesterday's update, you can find out this was what we had discussed and see how beautifully it has erased the gains. RSI almost staying flat, coming to 3 hour chart. See the 3 hour charts here. Similar is the observation. See, this is the highs here. This is the lows here. It is still staying in this bullish channel. After greater consolidation, it is trading in this bullish zone. And thus it appears we may see further bullishness today again. And hence it is not yet confirming as a reversal. Remember, bearishness today in oil is first it has to break below 63.8, 63.4 zone, and if that is also taken, then you can say 63 and 62.4, 62 till 62 we have very very good support available for crude oil here on the downside. Till 62 I will not treat oil as bearish. Stochastic oversold here. Another worry point here is the MACD, which is crossed over at the top. So this appears that for the next few candles it might trade sideways or with moderate bearishness before before the reversal here. RSI has dropped, almost staying flat, and similar is the observation on the 4 hour charts. Rise, sideways movement, rise, retracement, and now see it is consolidating here. Remember, one single red candle has appeared and it is taking now support from the 20 period. So let's wait for it to give you a breakout. If it stays below 63.8, 63.4, we can expect another round of drop all the way towards 63, 62.6, 62.4, and then 62. Though I am not in favor of such a greater correction, but yes, if it trades below the support zone, more bearishness should follow. Though right now I can say it is possible. See what has happened here, it might follow here as well. It may take few more candles for it to breach beyond 65 before it gives you a breakout. Stochastic oversold. See MACD crossing over at the top. It is a slight worry point. It is suggestive of more bearishness ahead, while the RSI is staying flat. Coming to daily. Now on the daily charts, notice after the rise it has stayed in zone. Now $60 has become a base for crude oil. With that as base, prices started to move upwards. Now see another zone here. This is pretty important. Look at 63.6, 63.4, and then 62. These levels are getting critical for crude oil. It has to trade below 62 in order to confirm further bearishness. Notice after the rise, a little retracement. This was the resistance. It has breached past the resistance and consistently delivered higher highs. Also, other point was that it was outside Bollinger Bands. It is consistently put pressure on the bands to expand. See, this was the neck. It is expanding here. It is a good sign for the bulls. And see yesterday's candle, higher lows, higher highs. So now when today's candle start, and if you see it is staying beyond 64.2, 64.3, established for 64.5, 64.7, and then 65, and then beyond that 65.5. If these levels are taken, stay bullish, we are looking at 66.2. Yes, higher highs should follow, and then I will say 67 level should not be far as well. Notice what's happening. It has formed a double bottom and it has breached past this highs. So after forming double bottom, this is a breakout, so possibly the oil is heading towards 68-70 zone. So I'll say till 62 is not taken, you have to be careful with the sells here, buys here. Stochastic overbought, the MACD is divergent and bullish, the RSI is flat. So yes, uh, take your trades accordingly. Now see how easily under 5 minutes we have analyzed the charts and arrived at the levels. You can also learn this art of trading. Invest in learning first. Join my 33rd mentorship batch, now scheduled for 16th of June. Register yourself now. Reach out to me for your queries. My Telegram and email IDs are there in the channel and video description. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me for your queries. Those looking forward to a trusted partner where you can trade profitably, where you can trade safely, the trusted partner which offers you a swap free account with lowest spreads and no hidden charges, easier transactions, and easier withdrawals from across the globe. You can find the trusted partner link in the channel and video description. Now, considering this, the buying entries we have cleared, this is around 64.2, 64.25, 64.3 zone, but then with the caution till towards 65, beyond the 65.5, and then I will look forward to 66.2, 67 level. On the downside, I will recommend a selling entry at 63.8 levels. Yes, if you see the higher prices below 63.8, take a sell. However, 63.6, 63.4, this is the strongest support on the downside, and this is going to be difficult for it oil to breach this. If it trades below this, you can say the bears are back. Expect 63. Once 63 is taken, expect 62.6, 62.5, and if that is taken, then 62. Till 62, it has got greater support. Below 62, it will turn bearish. Take your trades accordingly. Let's move to natural gas. Natural gas, if you look at, see on the hourly charts, you'll find drop, retracement, drop, retracement, drop, and it is consolidating again 20 period, 20 period, 20 period, offering it a greater resistance. Very, very important for net gas to trade above 3.7, 3.72. Then only we should treat it as bullish. And yes, even if you see it is staying above 20 period here, which means if you see it is staying beyond 3 to 3.6 to 3.65 zone, you can initiate a buy. Beyond this, it might turn slightly bullish. So 3.6 to 3.65 is what you should watch out for the day. Notice what is happening. It is trading in a narrow zone here. Drop, retracement, drop, retracement. It is trading in a narrow zone. And a drop below 3.56 should be a bearish consideration. The stochastic rising, the MACD, after hitting the bottom, it has crossed over, trading bullish, looking upwards. The RSI is staying flat. On the 2-hour, similar is the observation on the 2-hour charts here. Yes, it has found the support. With that, a support price is trying to bounce back. First breakout candle, so second candle could be there, which could take the prices towards 3.6465. The next resistance, so 3.6465 should offer a very good resistance. And then I will say 3.68, 3.7. A move beyond 3.7 is a good indication for the bulls here, because beyond 3.7 we can expect it to move towards 3.76, 3.8 zone. But notice it is very, very important for gas to stay above 3.8 in order to confirm reversal. Moving averages have crossed over. These are trading bearish. Stochastic rising here. The MACD is trading bearish, trying to converge crossover for a buy. Not yet crossed over. RSI rising here. Coming to 3-hour. On the 3-hour chart, similar observation. Now see, look at the waves here. See, first of all, look at the drop, the retracement, the drop, the retracement. Now also see higher highs, higher lows. Now if you see these highs and if you see these lows, you can see this is getting narrowed, means it is consolidating. Now it has to deliver a break, which means either it should trade above 3.8 or to trade below 3.5 and 3.4. So these are the levels which are going to play a major role in deciding the next movement for natural gas. See, moving average is crossing over here. Certainly, it's a bearish sign. Stochastic oversold trying to bounce back. The MACD has also retraced now, trying to converge crossover. RSI comfortably placed at bottom as well. Coming to 4-hour chart, on the 4-hour chart, similar observation, a good support is created now, trying to rise here, trying to bounce. I'll say till 3.7, it is true not to be treated bullish, and in fact, till 3.8, you have to be extremely cautious. On the 4-hour chart, similar observation, rise, then the sideways movement, then the drop, again a rise, then the sideways movement, again. Also, here slightly higher lows and lower highs are seen here. Yes, when I say lower highs means this, when I say lower highs means this, and hence it is very very important for net gas to stay above 3.8 in order to confirm reversal. Stochastic oversold, MACD trading bearish, RSI plays comfortably here. Coming to the daily chart. Now on the daily chart, see what has happened. The same formation what we saw on the smaller time frames here. Look at the formation here. It is staying in this formation. It has to break beyond 3.8, 3.85 in order to confirm further rise here. Look at the formation here. See the bearishness getting diminished here. And yes, it has to now break below 3.5 levels in order to confirm further bearishness. In fact, even if you see it is staying below 3.554, 3.55 levels today, you can expect more bearishness to follow. Right now, the point here is that the bearishness is getting diminished in these two candles, and in fact, it can bounce back from the current levels. However, till 3.7, you have to be cautious, and then beyond 3.7 and then 3.8, it has to break in order to confirm reversal. Else, it is still not bullish. Stochastic looking downwards, the MACD willing to cross over for sell, RSI looking down. So considering this, what I'll recommend, a buying entry has to be above 3.62, where you can expect 3.64, 3.65 first target zone, 3.68, 3.7 the next. If it stays beyond 3.7, this time our targets are going to be towards 3.7576 and 3.8. A move beyond 3.8 is a clear sign of reversal. On the downside, I will recommend a selling entry at 3.5654 zone, where you can expect, if you see natural gas staying below 3.54, you can say 3.5 is the first target, 3.47 is the next, 3.44 is the third, and 3.4 is the fourth. Below 3.4, it is to be treated extremely bearish. Below 3.4, it is not going to come back. We are looking at 3.2 and $3 levels very, very soon. Take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my Signal channel. Reach out to me for your queries. Join the free Telegram channel for live market updates. And join the channel memberships here on YouTube to support the effort. See you again before the US session with more updates. Thank you. Have a great profitable trading day ahead. Thank you.